In this video, you will learn about the tax deductibility of approved donations and unutilized donations. Donations are not tax deductible as they are not incurred in the production of income. Therefore, all donations that your company has made must be added back in the tax computation to arrive at the adjusted profit. However, while donations are not tax deductible, the Singapore government has allowed a 2.5 times tax deduction on approved donations to encourage companies to give back to the community. These approved donations may be made to an approved institution of a public character, or IPC for short, or to the Singapore government for causes that benefit the local community. To find out if an organization is an approved IPC, visit charities.gov.sg. So if your company has made an approved donation of $100, you will first need to add back $100 to arrive at the adjusted profit. The company can then claim a tax deduction of 2.5 times the amount of approved donations, which is $250. What if the allowable donations made during the year of assessment, or YA, is more than the income for that YA? Don't worry, you can carry forward the unutilized donations to set off against the company's future income for up to 5 YAs. The unutilized donations for YA 20x3 can be carried forward up to YA 20x8 and will only be disregarded in YA 20x9 if the amount has not been utilized. To deduct the unutilized donations against future income, the company is required to satisfy the shareholding test. This means that the ultimate shareholders and their shareholdings as at the two relevant dates are substantially the same. In other words, if the percentage of shareholding of the common shareholders as at the two relevant dates are 50% or more, there is no substantial change in shareholders and their shareholdings. Otherwise, it is regarded that there is a substantial change in shareholders and their shareholdings. For unutilized donations, the first relevant date is the last day of the calendar year in which the donations were incurred. This will always be on the 31st of December, regardless of your company's financial year end. The second relevant date is the first day of the YA in which the unutilized donations are set off against the income. This will always be on the 1st of January. In YA 20x3, SE Pastries Private Limited made an approved donation of $200 to an approved IPC. This means that the donation was made in the year 20x2. SE Pastries will first need to add back the $200 under non-deductible expenses, as donations are not tax deductible. Since the donations are made to an approved IPC, SE Pastries can claim 2.5 times tax deductions on the amount donated. This works out to be $500. But hold on, SE Pastries is making a loss in YA 20x3, hence the donations are carried forward as unutilized donations. The unutilized donations of $500 can be carried forward to set off against SE Pastries' future income for up to 5 YAs. This means that the YA 20x3 unutilized donations can be carried forward until YA 20x8. Any balance of the unutilized donations not utilized by YA 20x8 will be disregarded. In YA 20x4, SE Pastries' taxable income before donations is $30,000. Before SE Pastries can claim the unutilized donations of $500 in YA 20x4, it needs to check whether the shareholding test has been satisfied. Let's take a closer look. The unutilized donations were incurred in the calendar year 20x2, so the first relevant date for claiming the unutilized donations is the last day of the calendar year in which the donations were incurred. This would be the 31st of December 20x2. Now, SE Pastries is claiming the unutilized donations in YA 20x4. The second relevant date for claiming the unutilized donations is the first day of the YA in which the unutilized donations are set off. This would be the 1st of January 20x4. As at both relevant dates, Selina has been the sole shareholder of SE Pastries. Thus, SE Pastries has satisfied the shareholding test and is able to claim the unutilized donations of $500 in YA 20x4, reducing its taxable income after donations to $29,500. Hooray! Let's recap. Donations are not tax deductible as they are not incurred in the production of income. All donations made must be added back in the tax computation to arrive at the adjusted profit. Your company can claim a tax deduction of 2.5 times the amount of approved donations made to an approved IPC or to the Singapore government for causes that benefit the local community. Unutilized donations for a particular YA arise when allowable donations made during the YA are more than the income for that YA. Unutilized donations can be carried forward for up to 5 YAs. The unutilized donations can only be deducted against future income if the company satisfies the shareholding test. You may visit the IRAS website or contact us for more information.